All right, guys. So, good morning, everyone. We have news coming up in 8 minutes. Where's my. So, today, well, going forward, after listening to some ICT rambling, um, just going to look to capture, at least for me, like 40 points every day. So, 40 points. My plan is to take half off a position. I can see this very easily, 40-point run, but sometimes I want something bigger and that doesn't pan out. Once it gets to 40 points going forward, I'll be taking, I'm trying to get this to get to 40. Whatever. Maybe it's not about one. Perfect. So I'm looking for a move like this, 40-point run. I've entered about like 15 contracts, sometimes 10 contracts, depending. And I'm looking for just a 40-point run. So get a 40-point run, I'll just take half off there and then see if the rest plays out. So that's what I have planned going forward here. But right now we're in the mess, guys. This is a major consolidation, back and forth. Price is so ugly. If we look on the 15-minute time frame, it is ridiculous. Let's look at 15 minute for a second. I mean, the 5 minute alone, you can see all this bullshit here. Go on the 15-minute chart. Look at the mess we created in yesterday. Price is super ugly. This is not an easy market to trade. 100% not. It's super ugly price action from yesterday. Tough. Disgusting price action. And this is what I've been saying like for about a week or two now. Like price is being held as daily fair value gap. I think they might hold this till the election. So if you're in there getting your ass whooped, it's understandable. But don't beat yourself up too much. The markets will free up. But this is tough. The market's just being held in this daily fair value gap, not really picking a side. It's going back and forth. I mean, it's ugly price action here. It's tough. Okay. So time to dial back. It's now. Your trading is definitely now. But so far, we have a forward chart. We had a run here. Boom. Let's got these highs. And now we trade into this 4-hour fair value gap. And let's see if this holds up. I'm seeing some. So we'll see if this holds up. We're seeing some rejection take place in the 4-hour level. And perhaps to do on a way higher. So that's what I'm expecting. We're also in this daily fair value gap here. We'll call it that. We'll call it an order block. This down close candle here. This price digging into that, we can see that push price higher. So that's kind of my expectation. Sticking to the bulls. 1-hour chart, just ran out liquidity, and we have these clear highs to run out here. So we'll see if we get that momentum. Till then, I like what's happening so far. News in 2 minutes. So watching these highs here, probably will get tagged. Yeah, straight to the highs. Definitely gone. I'm gonna buy here. I'm really comfortable buying 15 contracts. Adding 10 contracts. A little later than I wanted to. Okay, so 40 points. What does that look like? 267? That's not working. Sell limit 5. Feel me? Wants me buying down in here, but these highs are for the taking. I didn't put my I didn't put my stop loss in. Sorry, guys. Put it right here. It's pretty low, but adding 5 more here. Okay, cool. That's out the way. All right, so see price can hit this high. And what I'm gonna take two off here. I mean, this is right above the highs, right? Low hanging fruit. Low hanging fruit. And we also have this, what's this? New week opening gap high in the way and a weekly fair value gap. So let's see if we hit here, how price wants to react. This could act as area of resistance if it gets up here. But so far it looks good. We saw rejection at these down close candles here. Still very ugly price acts. All these wicks. It's just ugly. Just want to see price move smoothly higher. I'm not a fan of these wicks here. It needs to constantly push away at this point. I use these down close candles. That's what I'm looking at. These 3 down close candles as an order block and push price higher. Now let's see if that's enough to push price into the highs. We already took out these highs right here. Now let me see if it has momentum to go up here. Make sure there's no other news here. So, I think that's the last news release. Still check. Yeah, all the news releases for the day are out the way. Also, it's good to point out this NFP week too. NFP week before election. Oh. How reluctant price is to just move anywhere. Good thing though, we're seeing down close candles being respected. This one got respected here. Look to the 1 minute chart. Took off. Price made this huge last 3 down close candles. 4. Price trades outside that, comes back in that range, takes off. It creates these 3 down close candles. And price trade into that and took off. So we're seeing the signatures we want to see for a constant move higher. It's just not exploding higher. So again, we're looking for 40-point runs, and I'll take half off if we get that. So actually 40 points put us right here. So 20,000, let's call it 560-ish. This. I don't want to see this go. If it's to start coming down, I don't want to see it go outside these series of down close candles range. It's taking too much time. It's not in a hurry to go higher. So you know it's a very rough price action. Mm. All right, so we just tagged those highs. Did we tag them? Feel very short. Not very short, just one tick away. Again, this could act as a resistance. This is the only barrier here. I don't see why they wouldn't take it though. Ideally, they should. This liquidity pool is hugging this level, so they probably should pierce above that. Now, is it going to tease my exit? No teaser there. Good. I like that. All right. So now we're up here. Mission accomplished. 40 points acquired. At this point, it could knock me out. It's pretty straightforward. You know, one of the things IT said that really struck a nerve with me was, well, at least the way I think. Before I met ITP, I was trying to essentially, figure out the markets, and I lean more on the probabilities of things. When you learn smart money concepts, you feel the need to have the answers to everything. Okay, that's moving too quick. Sorry, guys. Let me sell. I'll go back first. So 3 more here. That 15-minute fair value up. Oh, there you go. All right. Fly, Eagles, fly on the road to victory. Hit 'em high, hit 'em low. Watch them Eagles go. Okay. All right, light work, right? So it's hard to speak and trade at the same time sometimes. Like, you can't actually. Your brain can do two things at once. You deceive yourself. You think so. It doesn't happen. So, yeah, price is moving higher. We love this, right? Smooth. Okay, so now I can relax in this. Again, 40 points accomplished. Let's do this. Let's do maybe at 80 points, take out more. Murray took off 10, about 60% of the position, 67 or whatever. Yeah. Trying to send me a killer trade into. Shout out boy POZ Bow. All right, so we have some highs here. There's another level where we can take something off if we get up here. I think we can. Take 2 more off. We got to do. This is why I actually want to let function of time do its thing, meaning at 12 o'clock, where does price end up? a day like this, it could just, if it keeps going, it could just keep on going higher and higher and higher until 12 o'clock. It could. I see a full on reversal. If we do, my stop is definitely gonna get hit. It's all this liquidity resting here. And this could act as order block on a 5 minute. Probably gonna come knock me out if I'm being real. Unless this weekly level holds price. That stop loss. All right. Anyways, good trade overall. So, what was I saying before that big move lower? This is the executions, by the way. I'm pretty much done for the day. So we got in here 25.17, 25.26, and we got the 40-point run we were talking about, right? A little bit higher, but and again, this continue going higher, probably will. This down close candle here could act as an order block, but I want to be, comfortable if I had like a stop loss below here. They might just snatch all of that. If I'm being completely honest. Might just snatch all of that. But yeah, so back to what I was saying. Um, get a camera. 1 second, guys. Let's watch this to see if this 5 minute level here is at that order block, or if it wants to, if it starts rejecting going lower to knock out folks down here. I wouldn't be trying to rebuy this personally. I can see this acting as an order block, but I could see it acting as it. Keep in mind, I'm gonna delete this sell limit here. Where's my so I'm done for the day. But I do want to talk about a few things. There's no income. Where's my stance? And this price could really fly to, it could fly to 20,618. Who knows? Who cares? I'm done for the day. About being robotic. Okay, that's the topic we're gonna discuss for a second here. Like in this case, do you want to buy? Do you want to sell? What would you do here? Especially these tough markets. All right, see that 5-minute level can act as order block to keep pushing price higher. Perhaps will. They knew my stop loss was, that's all. Didn't want your boy to eat. This camera's not working. It's not working at all. I don't know why I bought this crap. I bought this like Aochan freaking gimbal stuff. It's so trash. If you're gonna buy a gimbal, do not buy this Aochan crap. Maybe I don't know how to use it, but bruh, it is not fun. I'm trying to get this set up. So we're gonna talk about this trade in a second, guys. Please give me a moment. You know what? Fuck it. This is trash. Should have returned it when I could have. I bought this little gimbal. And I'll tell you, again, if you're to buy a gimbal, do not buy the crap from Aochan. It's always a waste of freaking money. I need to get my money back. At this point, they owe me. They owe me. All right. So we're gonna talk about the trade. I just got in. We're gonna talk about trade. We're gonna talk about being robotic. What you gotta do to change the game. All right, so first of all, I was listening to ICT, right? And one thing that he mentioned that kind of struck a nerve, that kind of changed the way I'm thinking now, is striking for perfection is not always the answer to success. Sometimes it's about consistent results. Consistent results. It's not always about going for that perfect trade where you see a liquidity pool and you expect price to hit it. You know, he mentioned how sometimes I'll dial back and consider just taking positions off at 20 points. When price moves by 20 points, take a position off. And you can do that consistently. That way you can guarantee yourself a payday. Versus if you're looking for a setup where you're forcing price to make a huge move. You know, you're expecting price to make a huge move. You might know what the markets are likely to do. Like, for example, I could expect the price to go up into this 1 hour highs. That's an expectation of mine, right? Because it's ready to drop lower and lower into this 1 hour fair value gap. And from here, we could expect to move all the way up here. But what if that doesn't happen? Do I just go home without a payday? Or do I at least take something off at consistent levels? Something that's very, very systematic. Now, prior to meeting ICT, in terms of like being his mentorship, there was other people on YouTube I was watching, and I understood that trading was a probability game. But when you pretty much trade with the understanding of smart money concepts or the way ICT teaches, you tend to think that you know what the market exactly what the markets are going to do. While you do have a great idea of what the market's going to do, you still have to play with the probabilities, meaning price might not always hit that target that you're expecting. It might just run up 40 points. It might just gravitate towards that target. And you need to use that to then take something off the table consistently. Because you cannot expect price to constantly do exactly what you expect to do. But you can expect it to gravitate towards certain areas. And the question is, do you have any take profits in place, any system in place where if it moves by 10 points, 20 points, take something off, then you move your stuff to your trade to a break even, or are you just going to hold for the full pool? And what struck a nerve to me is that previously I used to be, this is when I was in college. I tried to build my own algorithm. I had oversold and overbought indicators. I had momentum indicators. I had my moving averages all in place. And essentially what I'll do is based off of my signals, I'll enter the trade, but it'll be more of me holding the trade because I didn't have a squirrel exit. However, every morning when I came to campus, because I used to commute to school, every morning I pull up to campus, University of Houston, by the way, my accounts would be in blue. All my trades, and I've trading like 10 different um, um, 10 different instruments in the currencies. It'll be Euro USD, GBP USD, NZD JPY, New Zealand versus the Japanese yen. And essentially, I'll always be in the blue, but I never knew when to close out a trade. But the fact that I at least was able to identify profitable positions was important, right? It's the same with this with smart money trading, ICT trading. You might identify a viable order block or fair value gap where price is going to gravitate towards a certain area. But because you're waiting for a longer term target, you don't take any partials off because you're looking for this Olympic feat of a trade. And that's what I've been doing, if I'm being honest with you. Like, yes, I made some money. Yes, I got funded $700,000 in funding. However, still, it's all about consistency. And to me, it's easy. Like catching 40 points, when you kind of put into perspective, like, okay, if you could just catch 20 points a day, right? And let's just say you have 5 funded accounts, 20 points, you times that by 10 if you're using 10 contracts. What is that? That's $400. 10 contracts, $4,000. I mean, 5 accounts, $2,000. So what I'm saying is, yes, we're blessed to be in a generation where we have prop firms. And if you're targeting just 20 points, just finding a price, an area of price where it's going to fluctuate by 20 points, just 20 points, or 40 points, then that provides you a little luxury where, okay, if I can see a 20-point move, in fact, my stop loss versus target could be even negative. But the fact that I know this price is likely to move by 20 points at a higher degree versus saying, hey, this price is going to go all the way up to these highs. You see what I'm saying? Like, it makes it harder for you to consistently hit those targets. If you were to build an algorithm or a systematic way of trading, a computer system, you have to give it certain logic, which is, hey, if price moves to this area, then do this. If this happens, then do this. If price moves about 100 points, then take 100% off or 70% off, and then move the stop loss to break even or move stop loss to 25% in profit. You have to actually give it a systematic way of thinking, give it some logic. So as traders, we tend to use our emotions and be human beings when we operate. But in reality, we need to operate as a logical computer system or logic on a computer system, meaning if then statements. So if price for me right now, my next step and what I'm going to do going forward, as you guys saw me do today, is I'm looking for 40 points. So I'm going to enter 15 contracts confidently. Some people might not be comfortable with that, but I know if I enter 15 contracts, I can easily see a 40-point move. I can enter 10 contracts, doesn't really matter. But the point is, I can see a 40-point move. And now it's forcing the ability to relax. Because now I've got the 40-point moves, my job is done. It's very simple. That's why the markets are fluctuating. I'm just talking while you guys are probably pressing buttons. For me, the job is done. I accomplished getting 40 points for the day, and I took half off, and then moved my stop loss to break even. Okay? And it went up a little higher. I took some more off. So I gained more than 40 points for the day. So every day doesn't have to be a 40-point day specifically. It's just the fact that your threshold where you're going to take something off the table is going to be 40 points. That's for me on the Nasdaq. Yours might be 20 points. Yours might be 50. It's up to you to decide that, but we have to bring in a logic where if price is gravitating towards our target, it does not have to hit those targets. So we have to be comfortable with taking something off the table at a very logical point. And for me, I see 40 points as a logical point where I can take half off the table or more than half. And then if the rest want to keep going higher, great. I'll keep on taking profits as we move higher and higher in price. But I just think it's super important that we identify certain logic that will help us be more consistent. And personally, I know and believe that adopting this type of logic where if price just moves by 40 points, 20 points, you take something off, that is a way to guarantee, you can't guarantee anything trading, but in my mind, that's a way to guarantee consistency. So not only am I being consistent in my trading model, I'm also being consistent in where I take my profits and how I'm making my money. Versus, again, waiting for price to move 200-300 points or 150 points. Easily could just take 40 points off the table. 40 points off the table. And another idea here is this. I'm not saying I'm going to do it, but perhaps, let's just say, for example, I already got 40 points. Then I can just be content. That's probably the best thing to do, just be content. But if you're like, you know what, I got 40 points. Now I want to go in and get 20 points, not get more. 20 points, perhaps risk less than what you risk initially. That might be another way to play. You're just waiting for the right setup that's going to give you a 20-point fluctuation, meaning price is going to gravitate towards an area that you identify is likely. It does not have to hit that target. The main thing is do not wait for price to hit that target. You could just take something off at a consistent level. And for me, it is 40 points, 40-point move. Depending on another setup, I could just say I want a 20-point move and I'm taking half off. So to keep that consistency going is about having targets. And my targets are based off how many points I can capture. I have a friend, he's basing his target off of 50% of the range. Perhaps you might want to do that. But for me, I see it more easily because 50% of the range can vary then. Because if the range is 200-point range, then you're looking for a 100-point move. If it's a 50-point range, and you're looking for a 25-point move. So it can vary. However, I guess the range it can vary. I rather do, for me personally, I'm identifying points. If I can capture a certain amount of points, certain amount of pips, I'm gonna take half off at that level. Or you can do a full pool, up to you. But take half off, then put myself out to break even. So that's just a way I feel like we can all be more consistent by having consistent targets and make our life easier, because this was very easy, straight to the point, 40-point move, no stress. Typically, I look for 100-point moves, but you saw this happen. So let's go into the trade here. Again, if this is helpful, please like, subscribe to the channel. All right, I'm doing my best. I'm always thinking about how I can help traders and that are struggling, and we're all in this together. It's not an easy game, especially in these current market conditions. Oh, it's freaking tough. It's super tough. Elections on the way. It's NFP week. It's going to be a hard week, to keep it a buck. So again, my goal is just keep on helping traders, bring as much information as I can, and identifying areas where we can help ourselves become more consistent and achieve our goals. It's not an easy world. So again, like, subscribe if you're getting any value from this. I'll highly, highly appreciate that. All right. So now we're going to get into the trade that I actually took today. Let's get into it. Okay. So it's the only trade I took today. Entry right here. You guys saw it. I didn't really get in at this fair value gap. That's what I really wanted to do. But anyways, entry on this candle, another entry on this candle. I added 5 more contracts for a run here for that 40-point run, and another run here. I took some more off, and we had that deep retracement that really just ran into, for keeping it 100, look at this 5-minute chart. This ran into this order block here. This to me should act as an order block that propels price higher. But because my entry was around this area, I got knocked out. And I'm okay with that. I could have moved my stop loss below the order block, but I didn't want to violate what I have in terms of my rules. Because again, if I was a computer system, if I'm thinking based off logic, it's simply, hey, take 50% off or 60% off at the 40-point mark, and then move stop loss break even. That's all I was going to do. So I didn't want to bring my emotions into it, or my human element into it, and then start moving my stop loss below order block that can then knock out some of the profit I already made for the day. Okay, even though I can see that it's likely that could support price, keep pushing it higher. And again, this could easily, the 5-minute chart by itself. There's highs right here that I'm expecting price to go to. Okay, and these highs were yesterday's New York session highs. It could go there, it doesn't have to. I'm just gonna draw this fair value gap out. Boom. So already hit this fair value gap. But I expect, personally, I'm expecting these highs to probably get knocked out. All right. So what was the trade based off of? One, our opening price is down here at 930, right? And then price consolidates, and we had this aggressive move here. Boom. Aggressive move here right at 930 opening, which snatched the lows right here. And then we had price. What did it hit? It hit a 4-hour fair value gap below and the high. See these blue areas here? So all I did was drop into that level aggressively below 930 opening. Then we create a swing low we push higher, price then drops lower into the range of this candle's wick and really into this last down close candle. So we're trading to an area where we've already seen damage done by this movement here. And then price trades into that to use as an order block to then propel higher above these easy targets, because these highs are resting here, those easy targets here. So that's the overall structure of the trade. Let's go on a 1 minute chart here. Now on a 1 minute chart, again, what do we have here? Same thing, kind of see more clear. We ran lower here on the 1 minute chart, then we start going higher. And if you look closer here, you can see how down close candle, see how price was respecting it right below 930 opening. And I was thinking about getting into this trade here, if I'm being frank, but I was waiting for 10 o'clock news release. I didn't want to get in too early. Following the rules here, there's news release in the AM session. I want to get in after that news. So anyways, we see price. We want to see down close candles be supported. We see that price pushes higher. Then we have this big drop here, series of down close candles. Kind of touches, gets this little fair value gap here and propels away. All right. And then if you look closer, look at how price then moves again. See this down close candle here. Look how price stops to T right at the 4-hour fair value gap high. Boom. And then we move, and I saw this fair value gap here, and that's really where I wanted to enter the trade. If you look at my entries, it was on those candles, but not really in the level. If I did get it here, I would have gotten knocked out. Anyways, so we had this fair value gap. That's why I was entering the trade. I can already see that down close candles are being respected. So I got in here, right? Knowing that we had a draw on liquidity, which was this weekly level, a weekly fair value gap high, new weekly opening gap, and also this cluster of liquidity right here. So that was the target. Clean, easy, entered here, then price went higher, came back down. We were at a previous monthly high. That's what PMH stands for. You see these 3 down close candles used as an order block that then pushes price higher. So then take out liquidity. You see me taking off half my position here. And then price trades even higher into the 50-minute fair value gap. You see me take off 3 more contracts. And you see the results of that. Boom, a quick little sell-off. Now the question is, do we want to keep pushing higher? I think we can. I think we will. But do I care as being a no? Am I satisfied? Yes. Is my day done and easy? Yes. And that's the point. 40 points captured. I can go sit down and rest. I don't have to stress about anything else. If I'm constantly just getting 40 points on a daily basis, let's just call it at 5 contracts. Even though I'm trading 15 here and there, let's just call it 5 contracts. What's the math on that again? And I'm saying 5 minis. Micros, sorry. Minis would be great. 5 micros. What's the math on that? 10 times 60 is 600, right? Am I doing it right? Let me kind of slow down. Yeah. Sorry, 40 points. So if I'm doing 10 contracts, so meaning I take 50% off, which is 5 contracts off at a 40-point move. So that's $400, securing $400 every day at minimum. And if price keeps going higher, great. $400 a day, $400 a day. If you have 5 accounts, that's $2,000 a day. If you have more than 5 accounts, then you do the math. Well, 5 accounts, that's $2,000 a day, secured at a minimum. And if I make more than that, like I did today, I made a little bit more, like 70 more points or 30 more points, great. If I don't, great. But $400 a day, you know, even with 2 accounts, that's what 400 times 5, 2,000, you know, times 5 days a week, 2,000 times 2 accounts, 4,000. That's $4,000 a week. 2 accounts only. So it don't really take much. If you just slow down and make it easier, make it easy, make it easy on ourselves, okay? And not expect to do this Olympic feat. We're not LeBron James in the NBA trying to dunk a basketball. It's about, or trying to do a windmill or something. It's just about being consistent. Just constantly doing what you have to do. Show up and shoot. That's it. Keep it simple. Say keep it simple, stupid. So anyways, If you haven't listened to IC Ramble on yesterday, you should listen to his last live stream. He gave a lot of um, psychological game, if you want to put it that way. And I benefited from it. That's what I listened to him for at this point. I know what the price is likely to do. It's about understanding as a trader, as you're developing as a trader, as we're getting more consistent, getting better at what we do. How do we go about doing that? So I hope this was beneficial to you. Again, please like, subscribe, drop a comment, follow me on TikTok, Instagram, all of that. I will highly appreciate it. But to keep it simple, just like and subscribe to the YouTube channel. Till then, I will catch you on the next one. Hope you have a blessed and wonderful